I think with regards to individual traders, um, so one thing I kind of noticed, like reading all these books and kind of watching interviews of the top traders on your channel, um, is everyone says something very similar but in a different manner. So it's kind of like find a trader that you want to study, and then kind of find those commonalities, right? And those commonalities probably mean something because everyone is saying it. So for example, with Gil Morales, pocket pivot volume signatures, volume dry ups, undercut and rallies. These are concepts that, Victor Sperendio has kind of talked about in terms of, his 2B setup. And then, volume dry up also ties up very well with Mark Minervini's VCP. So you can start to study Mark Minervini, how he kind of looks at charts, where would he buy, where would he sell, what is he thinking? So I think on top of just the methodology that each of these top traders bring, it's also important to kind of pick up on their psychologically, like what are they thinking, and apply that to your own thinking. Easier said than done, but it's all these kind of stuff that when you study them, you can find things that kind of work for you, and implement it into your own trading. And so that's kind of how my journey has been has been in studying all these different traders and finding commonalities, things that kind of fit my personality and works for me, and putting it into my own system. So it's a never-ending process. And so that's with the individual traders. And then with market history as well, it's kind of like, now with large language models, AI large language models, it's very easy to kind of go back and kind of read about market history. And I think there's value in that because history
Cycles
does
repeat.
not repeat. They always rhyme though. And so for example, if we look at, the 1930s, and there's a lot of resources, online. There are a couple of X accounts that do fantastic historical charts, and you just go there and take it and study it, and then run through the history of the stock, why it went up, through an AI model, and then you build all these examples. So this can be in the form of, so this is a form of a model book as well. And you'll see, like, for example, in the 1900s, the leading thematic was railroads, steel, and it's because it was very innovative at that point in time. Now, if we come to today, it's AI, it's all these data centers, space, uranium, there's an energy need, right? And so then it's a different theme, but the underlying driver is very similar, right? So kind of studying all these model book stocks, and then also kind of studying historical precedents. So a lot of people talk about this particular AI boom very reminiscent of the .com. So go and study the .com, look at charts of how a stock bottoms after a correction. And so for example, like the reason why I'm so honed in on undercut and rallies is look at Oracle, for example, back in the 1998, when the NASDAQ was double bottoming out of a correction or a bear market. Look at what Oracle is doing. It was forming a higher low. So these are the nuances that you pick up the more you kind of study and go through these cycles, and then you can kind of like plot where would be the setup for you, where would you sell. And so this is kind of like practicing and putting in the reps as well, right?